Yo, yo, yo. Definitely know what's goody with this one. This is 50, man. This is half a century, man. This is big for me. For me, this is big because who am I, man? I'm CPA strength, man. Let's get that straight. I'm the strongest licensed CPA in the state of Florida. I'm a grinder. I get it popping. I get it done. I'm up early before the birdies, man. I'm just popping fresh, boy. Let's go. Let's get it. I'm doing this. Doing this with a whiteboard. With a whiteboard and a camera, man. And a couple markers. Let's do this. I am CPA strength. I already talked about that. I teach the world accounting through basics and fundamentals building blocks. Here's a card to the best accounting playlist in the world. This will make all your dreams come true. Just watch the playlist. Now anyways, this is 50, bro. I gotta get it up for 50. I'm feeling like I'm in a good place. I got a lot of summer. I got some summer. I got fall. I got up till, let's see, currently it's the middle of July 2017. I have till the end of the year, I think 5.5 months. Yeah, 5.5 months until tax season rolls around. So taking care of some, you know, what I need to in my business. I purposely try to go a little slow on that so I could focus on the YouTubes, and I gotta tell you, I'm loving it. I'm loving the comments. I'm just loving everything about how the YouTubes is going for me right now. Seems like a lot of people are seeing the accounting. If you are liking the Accounting for Beginners series, here we're on 50 now. Oh man, so if I've given you some value and you're like, how can I give back to this channel, to this guy? You can simply, just watching this right now, you're simply doing enough. I mean, for me, you're watching the video, it's a view, it's great. If you want to do more than that, you can leave a like or a dislike. It's an interaction. I hope you like it, but it's up to you. So you can leave a like or dislike, either one. That's helping the channel. You want to further help it, leave a comment. That's channel interaction. Also, I always talk about my playlist and stuff because here's what I'm trying to do right now, especially towards the end of the year, is I'm just trying to make good accounting content, consistently good accounting content with every Accounting for Beginners hopefully getting better with the various number of aspects how you could define better every video, but I think you know what I mean. And if we look back from our first one, AFB Accounting for Beginners number 1 to AFB Accounting for Beginners number 50 right here, that it's a big difference. I probably, you know, the whole gamut, it's probably a big difference. Except guess what, I've just been being me since the whole time, so I'm just going to continue doing me because that's what everybody likes, and well, that's the easiest because I just go around with my life and just be me. AFB of my classic series, Accounting for Beginners number 50. This is titled DC ADE. It's a lifestyle. It's a lifestyle, right? DC ADE, it's a lifestyle. I don't know, I heard that off like some podcast, some weightlifting podcast I listened to. I don't know, I think it's just hilarious. Just like whatever it is, it's a lifestyle. So you're like, what does that mean? Be like, it's just a lifestyle, bro. I figure, I see Spicoli. He's like, Mr. Hunt, it's lifestyle, bro. Like when he's getting pizza in class and shit. Spicoli, Jeff Spicoli, Mr. Spicoli, what are you doing? Mr. Hunt, it's a lifestyle, bro.
All I need are some tasty waves, a cool buzz, and I'm fine.
So anyways, what I want to talk to you about in 50, I hope you you can see this board right now. I'm 10 years deep. I've been using the DC LER 10 years deep in accounting. I've been using the DC LER for about, we'll say 5 years. Through learning accounting for 10 years, for using DC LER for 5 years, for putting accounting videos on the internet for 2 years. Now this is my 50th video, so with all that and putting videos on the internet, you get questions from beginners, and beginners have better questions than really an intermediate or advanced because they don't have any preconceived notions. All that being said, this is what I think is important. If I could, like Marco Rubio, right? Give the guy some water, dog. Damn. It's a Florida thing. It's a Florida thing. Woo woo. Follow the flamingo, walk this way. Hey, walk this way to 7-Eleven. Follow the flamingo, walk this way. Hey, let's go. It's a Florida thing, dog. So this is what I would say is the biggest part of it. Now, I wanted to get to, now this is the 5 minutes where I need you. Put everything else away, all fun and games away. Let's just get into the video. The thing of this video, it's DC LER. If I could try to teach someone accounting in 5 minutes, which I'm going to try to teach you from nothing, like, and why is it DC LER? I would try to explain it like this: the lifestyle. It's a lifestyle, okay?
I know that, dude. Mr. Spicoli. That's the name they gave me.
I say DC LER because if you can't remember anything, you probably remember, if you wrote this out 1,000 times, let's say 365 times, you wrote DC LER out, then wrote it out: debit, credit, assets, draw, expense, liabilities, equity, revenue. If you wrote DC LER and debit, credit, assets, draw, expense, liability, equity, revenue every day, every morning, for a year you would know that. For 6 months you would know that. If you did it every day for 3 months, you'd probably know it. So don't be lazy, just get it done. Just do that. Just write this down. The reason I separate DC and make it its own thing, see, is because the debit and the credit is, I believe, the biggest. So I feel if you can remember the first 2 letters being debit, DC, that's why I say DC LER, DC LER, DC LER. So if you can only remember DC, that's all you can remember. What's the D for? Debit. What's the C for? Credit. I just want to stop and talk about that because this does not change. Debit on the left, credit on the right. That's why I try to draw these big. The debit's pretty big because it's like half of, it's just the left side. So I try to put this equal sign in the orange as meaning everything equal, meaning the left side, the debit side, is equal to the credit side. So this is kind of accounting. You're putting stuff in different boxes. There are inherently one of the best things. I'm teaching accounting in a couple minutes. The debit is left, the credit is right. Debit equals credit. Credit equals debit. One is not good, one is not bad. It just is a side. It just is the yin to the yang. Everything, you know, in accounting pretty much everything balances. We use a balance sheet. In life maybe it balances out yin yang, up, down. This has been for 500 years. The debit on the left, credit on the right. Ever since the beginning of the double entry system, since the late 1400s. And all the videos online, all the books, I don't think you will see anything different than debit on the left, credit on the right. The reason I make this separate is because I want this to be, this is huge, because the rest of these 6 letters here are under either a debit or a credit. So I have, and most people have as well, maybe 5 boxes. I have 6 boxes in my mapping system. These are these are in the positive form. So if a positive asset, I have this box, asset box, a draw box, an expenses box, and then I also have a liabilities box, an equities box, and a revenue box. I have six different boxes that if something comes down through the pipeline, that it could go to. Now other people might call these 6 different, other accountants might call these 6 different boxes something else, or they might only have 5 boxes. But case being, if an expense comes through your business or something happens through your business, accountants through chart of accounts and subgroups is going to put something that happens in the business in a certain box, and it's most likely going to be 5 boxes, 6 boxes, whatever. And this is a balance sheet is assets equal. I want to make this very clear. This is the left equals the right. Debit equals the credit. The yin, the yang, equals. Whatever these boxes is whoever the accountant wants to label these. I happen to label mine assets, draw, expense, liability, equity, revenue. Mostly every other accountant will have an assets box. They will label this one assets, or one of their boxes assets. They will also label one of their boxes liabilities. Equity, they'll probably, this is the balance sheet, assets equal liability plus equity. So they'll probably also have another one called equity, or maybe capital. I include the income statement as well in my mapping system of DC LER, and I think everyone would agree on an income statement is revenue minus expenses. So the only kind of maybe extra box that we haven't touched on that I might have that someone else wouldn't have, it's a little spicy for the accounting world, is maybe the draw box, but not really. We've talked about that. That's negative equity. So that's how I put my boxes in. Anyways, we're almost done. We're almost done, I promise. I promise we're almost done. So that's how I define my boxes. I happen to have 3 boxes in, well, actually, positive. If it's a positive one of these 3 boxes, or a negative one of these 3 boxes, it would go under a debit. Under a credit, I would put one of these 3 boxes in the positive form. Also, I put, if any of these 3 boxes were in the negative form, I'd make it a credit. Whenever something happens in the business, it comes through the business, it's got to go through first. You got to figure, is it a debit or a credit? It's going to be either a debit or a credit. Then a sub-heading under that. And this is something I didn't understand, that an asset is either a debit or credit. A draw is either a debit or credit. An expense either a debit or credit. A liability is either a debit or a credit. Equity is either debit or credit. Revenue is either debit or credit. To illustrate my point further, I want to go through, this is a happening in the business, the blue. It's happening, it's happening. So something's happening through the business, and everything has to equal. So whatever, so let's just, if something has cash in it, and these are all positives over here, right? So let's just go, something goes down like cash. Cash would be an asset, so cash would go over here. So cash would be under a debit. Boom, 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 boom. Also, something's coming down. A dividend. What would a dividend be? Oh, a dividend would go over here. Would be in a draw. What happens if you had a Wi-Fi expense coming down? Wi-Fi, or you paid for Wi-Fi expense right here. What happened if you were buying a truck? What happened if you're buying a truck? Oh, it would go over here under assets. What happened if you had a shareholder distribution coming down through your business? Oh, shareholder distribution, that's a draw. It would go right here. What happened if you had fuel expense for that truck in your business? Oh, it's over here, fuel expense. It would go in this. See, all these things would go, it's another subgroup. So, Wi-Fi, internet expense. What is internet expense with Wi-Fi? It's a debit expense. It's an expense, and it is a debit for a journal entry. That's what the Wi-Fi is. The Wi-Fi goes in the expense box and then the debit box. Everything that comes down goes in a certain box, in one of my 6 boxes, and then one of the 6 boxes are either a debit or credit. I have a loan payable to somebody. What would that be? That'd be over here. That'd go in the liability box. What if something was coming down and I had a common stock or a stock to put on the books? That would go in equity. What if I sold a service, like I did bookkeeping for somebody? I sold bookkeeping. That would go over here under revenue, in the revenue box. What happened if I have an accounts payable? I owe somebody money. That would go over here in the liabilities box. What happened if I have retained earnings? I have to do something with retained earnings. Where would that be? That would be in the equity box. What happened if I sold a product? What happened if I was selling products? Physical, tangible goods, inventoriable goods. That would go over here in the revenue box. So there, basically in 50, I know it went over 5 minutes, maybe it's 10 or 15, but in all, if I could put all my experiences into this 50th video, you know, and teach somebody in a couple minutes accounting to the best of my ability, that's what I'll give you. Maybe I'll give another one at 100 or 200. The more that I give to the world, to the YouTubes and my accounting, the more I get back in many different ways. So, as much as you thank me, thank you very much. Until next time, deuces.